what factors impact or influence interest rates?
Okay, so there's
Just a bit of insight.
Yeah, there's two different types of interest rates. So you've got variable rates en masse, so that's things like trackers, discounted rates.
Yeah.
And they literally are following the Bank of England rate.
Yeah.
The Bank of England rate is in place to look after inflation, basically.
Sure.
So if inflation increases, the rate inevitably will either stay where it is or it'll go up.
Yeah.
So that's that one bit. Obviously, the reverse is true as well. Fixed rates are a little bit more complex. So in terms of fixed rates, banks and money housing lenders are borrowing their money from the market, basically the money markets.
Yeah.
Those rates that they're then charged are then passed on to the consumer. So essentially things like gilt rates, which is government lending, employment figures, economic data. So
Gilt
when you hear
rates.
when you hear about employment numbers, percentages wise, that kind of thing are all at play when it comes to those rates. Now, with the Bank of England rate, there's a meeting every 6 weeks to decide what's happening with the rate. With the money markets, those rates are live, so it's a day by day sort of basis in that sense. So those rates are a little bit more sensitive. So if you imagine inflation is one of the big drivers for both of those rates, that's why you see a drift with the fixed rates downwards pre a Bank of England rate decision when it comes down. Because the data's already in place to drift it that way.
It's changing almost hourly, isn't it?
It's a pretty rapidly moving situation, particularly currently, because things are changing all the time.